Markets are spinning on Fed drama, bond yields are surging, and a big week of data and earnings are ahead. Plus, Nvidia's monster AI deal and the next wave of companies actually using AI to win big. Let's dive in. Welcome back to Navellier Market Buzz. Last week, good news turned into some bad news. Bond yields jumped and the Fed cut hopes sank. What's really going on?
Well, the economic news was too good. New home sales surged. Apparently, they're discounting homes to sell them. 39% of new homes are being discounted up to 5%, according to the Home Builders Association. Durable goods were shockingly strong. Military orders were up 50%. Transportation orders up 7.9%. That's Boeing. We back all that out, though. Core capital goods were still up 0.6%, so it was very, very strong. And, the Fed really needs to see weak labor markets. Unless we get a weak payroll report on Friday, we're not going to get a Fed cut because the economic data is too strong. One last thing. They revised second quarter GDP up to 3.8%. And we're going to have big upward revisions to our GDP. The other reason is that the trade deficit fell dramatically in July, and that's going to cause another big upward revision. So we're pushing 4% GDP growth right now, and that's with a weak housing market. So if we ever fix housing, we're going to be at 5% GDP growth.
Speaking of home sales, they seem to be soaring. Is housing coming back, or is this just a bump?
It was just the new home sales. Existing home sales does remain weak. I was actually in Santa Rosa not that long ago, and they have all these beautiful homes and oak trees, and you can't sell them because you can't get insurance because that area burned up. And it's very sad to see a beautiful community with, just an untold number of homes for sale because people can't get insurance. And you can't get insurance, you can't get mortgage financing. So there are other things weighing on the housing market, but the main thing is still affordability.
Now, durable goods popped on aircraft orders. Is this real strength?
Yeah, because the core rate was up 0.6%. We back out both military and transportation was up 0.4. But yeah, it was pretty strong across the board.
And the trade deficit just hit a 2-year low. How big of a deal is that?
Well, we had imports fall 7%, and we had exports fall, I think, 1.3%. So, but that's a big component of the GDP calculations. And, we still think there's disruptions from the tariffs, but it's adding to GDP growth at this moment.
And jobless claims dropped again. Is the labor market still too hot?
Well, weekly jobless claims are very erratic. As you know, living in New York with all your friends, the job market's not perfect, okay? So a lot of companies are just cautious until everything settles down. The rules are still changing. President Trump just imposed 100% tariffs on branded pharmaceuticals if they don't manufacture in America. Now he'll waive it if they are breaking ground on a new plant. But clearly, all the pharmaceutical manufacturing in China, Ireland, Switzerland has to move to the United States. Lilly's leading the way on that front. So that causes uncertainty, and then he just slapped the tariffs on furniture. So stocks like Restoration Hardware got hit pretty hard. And most furniture is made in Asia. We'll see if we can get that on short as well.
And the Atlanta Fed's GDP is now out. Are we headed for a strong third quarter?
Oh, yeah. Yeah, we are approaching 4% GDP growth. I don't care what the Atlanta Fed says right now, but they've been revising it higher. As we speak here, we have another revision coming. But that's an amazing, amazing GDP growth. So all this onshoring is real, and it's mostly automotive, pharma, and of course, all the data center boom. And a lot of companies have to rush to break ground this year because they want to expense it this year.
Even Moran is calling for a massive 50-point rate cut. Is there any chance that he gets it?
He actually called for a series of 50-point rate cuts, or 50 basis point rate cuts. Now, he's probably not going to get it, but he made a very good argument that something out there could be looming. And he didn't say it, but I think he's worried about a credit crisis. We had a subprime lender in Texas file for liquidation, and that's hurting BlackRock and JP Morgan, according to the media. We just had CarMax announce very disappointing results. I don't know if the failure of that subprime lender was part of it, but what's happened in America is Dodd-Frank has made lending through banks very difficult. And if your credit score is not perfect, it's not above 800, the banks don't want to lend to you. So if you're 798, they'll pass you off to the private credit folks and they'll mark up the loan, and then they sell the loans back to their investors. They're paying up to 11% because they're leveraging these loans. And this is a $3 trillion a year industry. But right now, you can go get 11% yield. You just walk into any Morgan Stanley, Merrill Lynch, UBS office, and they'll get you 11% yield. Now, they're starting to charge upfront placement fees for that, sometimes up to 2%. So just be aware of that. The problem is leverage loans don't always end well, okay? And there is a default rate now. Last I looked, it was 7.2. I'm sure it's up to 9. I haven't got the latest data. And eventually one of these big private credit folks is going to fall. And I think that's what Steve Moran is worried about. Because if the private credit industry has a mini black swan event, where everybody stops lending, the Fed's going to have to slash at least 100 basis points. And he wants to be prepared for that. And I don't think the Fed is prepared.
Now, this week we have consumer confidence, the ISM manufacturing, ADP payrolls, and the big jobs report. Which one do you think could shock the market?
Well, I expect consumer confidence to be good. We had personal spending just come out, and it was up 0.4%. That's personal income's up 0.4%. Spending was up 0.6%, actually, according to the data. So that means consumers are spending more than they're getting. So that's a good sign. Consumer confidence is going to be fine. ADP data is going to be a big deal. Okay. I love that data because it's clean. And then the payroll data will be the biggest deal. Hopefully the new guy running the labor department is going to give us clean data without a lot of seasonal adjustments. I do expect ISM manufacturing to turn up. It has to turn up because we just had military orders up 50%, and we just had transportation, mostly Boeing, up 7.9%. So we're going to get a good ISM manufacturing report. But yeah, everything next week is all about that payroll report.
Now we're getting a lot of requests for stock picks. So let's talk AI, defense, and data centers. Who are the winners?
Well, AI is obviously led by Nvidia, and they had the big announcement that there's $100 billion it's going to be invested with OpenAI, and they literally said they're going to sell millions of their GPUs, millions. So that got Nvidia all excited, but Nvidia has a monopoly on the good AI chips that require the machine learning. You can buy the companies that are Nvidia's customers, like a Supermicro computer, which are installing their rack systems in the data centers. I have plenty of stocks that are about building the data centers. A couple new ones. Well, I've had recommend this one for a while, but a good buy at this moment is Bloom Energy. They make they work with Oracle on the data centers, and they have these fuel cells to make them more efficient and greener and all that good stuff. So Bloom Energy got hit this week on valuation concerns, but it's a good buy near term and has explosive forecast sales and earnings growth. The other one is UI. It deals with speeding up all the cabling and everything in the data centers. One of the issues with the internet is as we speed it up, we have to change all our hardware. So when you go from 1 gig to 2 gigs, if you want to get your full speed, you got to get faster routers, you got to get sometimes faster Ethernet cables. But the data centers are fiber optic, and they're running 10 gigs and up to 10 gigs or so. So they really have to have all this great hardware that UI makes. So those are two new ones. We've talked about a lot of them in the past, but we have several stocks that benefit from the data center build-up.
Nvidia is also leading in quantum, while D-Wave just won a programming contest. Who wins the quantum race?
We don't know. We know IONQ. They figured out how to package data for the quantum programming. That's called QuidBits. They're getting contracts. D-Wave's getting contracts. Rigetti's getting contracts. So there's no earnings yet, but at least there's sales, especially with IONQ and D-Wave. But NVIDIA has a quantum cloud simulator and had a quantum day earlier in the year. and D-Wave won that programming contest. So that was very, very impressive. And that's QBTS. And we've written all these special reports on them, but we want to remind everybody these companies not making money yet. So they're exciting, okay, but it would help to make money. And why quantum computing would be a big deal is Nvidia said that after the next two chips they announced, one in mid 2016 and one in 2018, they don't expect that they'll be able to make the chips much faster because the transistors are approaching the atomic level. So you can't split an atom to make a chip faster. So the next trick will be to go to quantum computing where you use a 1 and a 0 instead of a 1 or a 0. So that's what's coming. And, hopefully they make money in 5 years or so. But that's the track you're on right now.
And here's the real question. Beyond the giants, who are the best AI appliers turning this tech into profits right now?
AppLoving, APP, is definitely in that camp. I would put in Guidewire, GWRE. They had blowout earnings. And I would also cite Robinhood, which is benefiting from the crypto boom, getting everything legal. And then finally, we have Spotify. Spotify is a little tricky because they tend not to beat analyst estimates, or the analysts can't figure out what they're doing. But a lot of businesses set up on Spotify, and they have very smart AI. The way the future is going is direct sales are better than storefront sales. And that's part of the productivity miracle that's going on in America, and AI is part of that.
Now let's get into some earning announcements. Carnival is very interesting to me because I see at least 2 of their ships pass by my apartment in New York City. So will their cruises keep sailing past expectations?
Oh, yeah. Yeah. Sales are forecast to be up 2.7%. Earnings are forecast to be up 3.7%. They're steady analyst estimates. But this company's had massive earnings surprises in the past 3 quarters. So they must be making all their money on drinks or something. Those cruise ships get a little rowdy,
Mm-hmm.
So hopefully you're waving at them as they pass.
Now, Lamb Weston, fries are their game, but are sales slipping?
Yeah, their sales are forecast to decline 2.3%. Earnings are forecast to decline 26.9%. There's been some recent analyst cuts. But the company's posted 2 huge earnings surprises in the past 2 quarters. So let's face it, we are not potato experts, okay? And fries, frozen French fries, are somewhat of a luxury item, okay? And they sell a lot, of course, to restaurants and all too. But let's just see what they have to say. There's been some issues with the potato supplies in the past, and that sent the prices soaring. So they haven't returned to where they once were. So maybe they'll give us some good guidance. I do like the fact that it surprises.
And Nike, sales and profits may be limping, but do you think that they can push through this?
Well, this is a company like Lamb & Weston because when you look at them, they don't look that good, but then they surprise. So Nike's sales are forecast to drop 5.2. Earnings are forecasted to decline 61.5. Steady analyst estimates, but their surprises in the past 4 quarters have been ridiculous. Some companies just don't have a good relationship with the analyst community, and the analyst community just doesn't know what to do. So let's just see what Nike says, and let's see what their guidance is going to be.
Now, RPM International, they've had some good history, but are they still running smoothly?
Yeah, this company, of course, provides lubricants, okay, for machines and equipment to keep everything running a little better than it should. And their sales are forecasted to go up 4.4%. Earnings are forecasted to go up 2.3%. Steady analyst estimates. They did surprise last quarter, so they'll probably be okay.
Now, Conagra, are we expecting a third miss?
Oh, God, what a mess. Conagra is a big multinational. And as soon as you leave the United States, economies are weak. That's been weighing on a lot of these multinationals. Their sales are forecast to decline 4%. Earnings are forecast to decline 37.3%. Missed in the past 2 quarters. Trump is now offering some relief to farmers via the tariff revenue. You may know that we're not selling soybeans to China because we're arguing with China. And So the farmers are really hurting. And of course, prices are soft because it rained a lot and we have too much corn.
Now, Cal-Mine Foods, you've talked about quite a bit. Can you expect another strong report?
I hope so. Their sales are forecasted to rise 21.2%. I own the stock in managed accounts. It's really more of a dividend stock. But they've had big analyst upgrades, and they had a big earnings surprise last quarter. The problem with Cal-Maine is it's the biggest egg supplier in the U.S., so the birds cannot get sick. Okay, if the birds get sick, we got to make sure they don't get sick in their hen houses. So egg prices are still relatively high. It has very good earnings in the pipeline, but let's just hope the chickens stay healthy. By the way, one thing I did notice in Santa Rosa, walking around the neighborhood I was at, I had no idea chickens can get that big. So they are breeding monster chickens out there.
And lastly, Levi. Will Levi pull off another surprise?
Yeah, their sales are forecast to decline 1.3%. Earnings are forecast to decline 3.3%. But they got steady analyst estimates, and they've had two big surprises in the past 2 quarters. So whoever the analysts are covering a lot of these stocks, they're not doing a good job. Okay. And everybody should know how you get good analyst coverage is you need money from Wall Street. When you need money on Wall Street and you're doing secondary stock offerings or bond offerings, they actually know what you're doing. And then when you're not going back to them for money, sometimes they forget about what you're doing. So I don't want to blame these companies for the guidance. It could be them, it could be the analysts. But, it's funny, these last couple stocks and Carnival, they just have these ridiculous earnings surprises. And I don't know why the analyst community can't hit the broadside of the barn.
Now let's move on to subscriber questions. Can you please analyze IONQ?
Yeah, well, obviously, got a big contract. It's how you package data for quantum programming. It's the quantum computing leader. The other companies are working on the programming languages, and that's really what it's all about. Who has the best way to program quantum computers? But Quibbits is IONQ's accepted method to package data for the quantum computing. So they won that already, and we don't expect anybody to compete with or make a better Quibbit. So, and they also got a nice government contract the other day. So it's a leader. I think D-Wave's a leader, and Rigetti's starting to get some contracts. But right now, IONQ and D-Wave have the strongest sales growth. And IONQ did have a secondary stock offering that got everybody excited a few months ago, and it's been going higher since then. So Wall Street is eager to lend it money. So this is a very serious company. I tend not to put these stocks in managed accounts till they earn money, but we've written a lot of special reports on them. And we're very proud that we were early, and these stocks have gone up more than 1,000% since we wrote those reports.
Another one of our subscribers brought up how Henry Dent predicts a huge stock market crash. What are your thoughts on that?
Well, that's a very good question. Henry Dent's always been promoting a stock market crash. Henry Dent is a demographer, and he's been very correct that there is a demographic problem in the world. We don't make enough kids, and so we're not replacing households, we're losing households. And that's not so much in America yet, but that's common throughout Asia and especially Northern Europe. So when you lose households, it's very, very hard to grow your economy. Japan may be the exception. They have the highest birth rate in Asia, but not enough to replace households. But they've had massive productivity gains. So if we have productivity gains with our aging demographics, we can still grow, okay? And I think that's going to be the key. So AI is important. Okay. The other comment I'd have is that the U.S. is an oasis in the world. What do we have that the rest of the world doesn't have? Well, we still have two very pro-family regions, the South and the Mountain West. They do create a lot of households. That's why Utah's been the fastest growing state in America for decades. And household formation is good for economic growth. We also do assimilate our immigrants. I realize President Trump wants them to be legal now. Okay, so there's a bit of a reorganization there. But, the U.S. is still very pro-immigration, and the immigrants now just have to be legal, have green cards, so or the temporary work permits and stuff. So we'll see how that happens, but we're just in better shape. Other countries are, well, in Asia, they tend not to have immigration. And then in Europe, they have immigration, but they're not assimilating those immigrants lately in Britain and France and Germany. So there's some issues. Whatever Harry Dent's warning about, it really doesn't pertain to America.
And lastly, one of our subscribers wanted to know if investors should buy gold and silver for investment protection or both.
I would rather you just buy gold. Silver's much more volatile. I know it's doing well, but it's much more volatile. And gold's doing well because central banks are hoarding gold. And when you buy gold, please be careful of the markup. Obviously, you can buy gold at Costco with minimal markup, so that you might want to try to do that. Or if you have a trusted gold dealer, make sure the markups are very reasonable. And your coins will have a bigger markup than your bars. So I'd rather you buy predominantly gold bars, but we'll see what deal they give you on the gold coins. I'd like you to own mostly physical gold. I'm recommending 8 gold stocks. That's another way to do it. And the best one is Kincross, KGC, just so you know.
And could Navellier Gold Service make a comeback?
Yeah, we used to sell gold direct, and then we sold that business to Blanchard. You know, Blanchard, they do the conferences down in New Orleans and all. It was an interesting business we were in. We wanted people to buy physical gold without a big markup. But in the end, you have to have big economies of scale. So that's why we sold out to Blanchard.
Well, the Fed is cutting, AI is climbing, and earnings are cracking. We'll see what holds up next week. Make sure to give this video a like and subscribe if you haven't already. If you want us to answer any of your questions, leave them in the comments below. But until then, we'll see you all next week for a new video.